Hello, everybody. Welcome to the Fintech Combine. I am your host, Kris Kovacs, and this is the series where we talk with and sometimes about community-based institutions, their digital and business transformation projects, and we meet the innovators, entrepreneurs, and fintechs that make it all possible. On this episode, we're speaking with Dr. Lamont Black, founder of Wide Open Ventures, and learning how his firm is helping credit unions make sense out of these emerging technologies like stablecoin, AI, and blockchain. So if you're ready, let's suit up and get out on the field. Dr. Black, thank you so much for joining us on this episode. For those who have been living under a rock and don't know the kind of vast knowledge that you bring to the credit union industry, could you share a little bit around your background and what you're doing at Wide Open Ventures?
Yeah, thanks, Kris. Great to be here. So my background real quick in terms of my bio is like former Fed economist, worked in Washington, D.C., now at DePaul University in Chicago. But I've been spending a lot of time with credit unions over the last 4 years. That was originally around crypto, if people remember kind of the Bitcoin wave around that time. Over the last few years, it's been focused more so on AI and technology adoption. And now a big part of what we're going to talk about with stablecoins and the Genius Act. And so, Wide Open Ventures is really like a technology, strategy, and culture consulting agency. So we help credit unions understand how to do technology adoption from the board level, executive level, all the way down to the staff level. Just, these are big changes and we want to help credit unions adapt to them.
What do you think the current status is of the kind of blockchain crypto world? Because that's where you started. So I want to start there too. And then we can kind of walk forward as to kind of what that means for credit unions. What is the current world that's out there today?
Yeah, I mean, the crypto world has changed a lot over these last 4 years. Even when I started, it was really still kind of at the periphery, like the wild, wild west. And over the last few years, it's become more and more mainstream, more Wall Street. Even before the current administration, we had the SEC approve crypto ETFs. So now people can own crypto just like they would own a stock ETF. And so there's just a lot of those associations people had with crypto being illegal, dark web. There's still those elements, but it's gradually that's moving to the periphery and now it's more mainstream. I think stablecoins are the leading use case for crypto right now. So there's a lot of talk about payments, money transfer, things like that. The frontier is also now like tokenization of real world assets, or RWA. So even the like DTCC, which does clearing for the US stock market, they are looking at putting stocks on a blockchain. I would say, so part of my work through Wide Open Ventures, we have a platform called Loan NFT, which is about doing loan participations on a blockchain. So this type of tokenization, I think, is going to gradually move beyond just money, which is what stablecoins are, to even other types of financial assets. So yeah, the crypto ecosystem is growing and expanding. And I think with more regulation, there's also more clarity and a little more sanity, perhaps. So I think these are all good things.
So you mentioned legislation. Let's talk a little bit about the Genius Act. Hopefully everybody has heard of it, but walk us through why that's so important to the future of stablecoins for credit unions.
Yeah, so stablecoins have been around for years now. So USDC is the leading stablecoin here in the US. The leading one globally is called Tether. So there are, you can look up the stats. There are billions, even trillions of dollars moving through the global payment rails on these stablecoins. But it has still been a little bit at the periphery because it was outside the traditional regulatory circle. So I think the Genius Act is an attempt to bring it inside traditional finance. So when I'm trying to explain the key takeaways from the Genius Act, I would say there are two in my mind. One is the one-to-one reserve. So every stable coin backed by $1. So that removes fractional reserves. That's one of the big concerns around Tether. How many assets do they have? What are those actually in. And so there's been historically a bit of liquidity risk in the stablecoin market. And, whenever you break the buck and lose that peg, that creates a lot of uncertainty. And people are probably familiar with some of those stories in the past. So the Genius Act kind of shifts all that off the table, because now it's really just the technology that is backed by the dollar. It's removing any of that question mark. And then the other big thing is the compliance. So KYC, AML, BSA, all the traditional identity verification and making sure that these are legitimate users and that they are doing this for legitimate purposes. All of that's going to be baked into the stablecoin payments. And so this idea of crypto is anonymous and it's all illegal, like that's removing all that discussion from stablecoins as a payment method. So I think those are like two of the big question marks: the stability of it, and then the kind of the user profile of it. And I think this is bringing this into the light. This is creating this intersection between traditional finance and blockchain finance, if you will. So I think it really creates a clearer path forward.
What are the opportunities that stablecoins represent for credit unions?
Yeah, I love how you phrase that, because most credit unions, I think, are more focused on what is the risk of stablecoins. I do think there's a strategic risk, and we can get into that a little bit later. But, I see this as the natural evolution of money. In my presentations, I go all the way back into the history of money, like gold, then the gold standard. Think of paper money as a technology. No one trusted it when it was introduced, and so it had to be backed by physical commodity money. Stable coins are the next leg of that. People don't trust stable coins, and so they're backed by US dollars. It's sort of like the dollar standard for stable coins. But when I think about credit unions and their members, members aren't asking for this today. So I don't want people to come away from this and say, well, I haven't heard of this and I'm not getting any phone calls or emails about this. Like, the Genius Act is going to amplify that as we move through 2026 into 2027. So the discussion should be more around preparation, not implementation. And I think the opportunity is to have a seat at the table so that, you can say, like, how do we onboard and offboard, or on-ramp and off-ramp between dollar deposits, like a share account, and some type of stable coin account? I think that's the opportunity, so that they're not forced to go to a Coinbase or some other third-party provider. They can do it directly with the credit union. That doesn't mean the credit union has to have their own stable coin or any of that. It could just be, we are just an entry point into this ecosystem. That's where I want the discussions to be focused.
There are credit unions talking about their own stable coin, though.
For sure. Yeah.
What's the potential risk of that?
Yeah, well, there's not just credit unions talking about it. There's credit unions who have done it. They have issued their press releases, St. Cloud being one of them. Kudos to anybody who's trying to this. I don't want to discourage credit unions for exploring and experimenting. I'm a big fan of experimentation, and that's part of how I view this. I see the downside risk of that being the kind of the uptake and the usability. So, issuing a stable coin is not that complicated, because, it's really, if you know anything about blockchain and smart contracts, it's a smart contract issuing this fungible token on a public blockchain. The technology itself is quite straightforward. The business use case is where I want more credit unions to be focused on. I think a lot of them are still trying to wrap their heads around blockchain, stable coins, the technology piece of it. But, a stable coin has no value if you can't spend it. It can function as a store of value. I mean, one of the credit unions I'm working with, they're focused on international use cases like remittances and things like that. If you live in a country that has an unstable currency, this offers a store of value. So, I get that point. But for a traditional U.S. credit union serving U.S. members, they can do most of that store of value stuff with their share account. It's really about, when I want to transfer value, like a peer-to-peer transfer or a merchant purchase, am I going to use a card or am I going to use a stable coin? That's kind of the strategic decision point that will gradually emerge for the members. And so for a credit union, they should be saying like, hey, if things start shifting towards stable coins in terms of like merchant transactions, are we prepared for that? And you don't have to issue your own token to do that. One of my concerns with credit unions is like, if CU Ledger and that whole history, like beautiful history in terms of the ideation and the collaboration, but it never quite took hold. And part of that, I think, was building these kind of like internal systems to serve the credit union industry. Like stable coins need to be more of a network technology. We're not going to use it to transfer between credit union members. You want to be able to transfer it to a merchant. They have to be willing to accept it for that to be usable. And so you want to be using that, best case technology. So then it becomes ubiquitous and you're kind of, I like to say, out swimming in the ocean, not just playing in your own little pond.
Right. Yeah. I think that's why your work at Wide Open Ventures is so important, because you don't just talk about tech. You talk about tech, the strategy, and the culture that the organization needs to have in order to make the most of it.
Yeah, I believe this is about organizational change. I make the same point about AI. It's not just the IT department. This isn't like a new software. This is about shifting your business model in this new direction. Stablecoins are a little bit different because it's not going to impact everyone. It's not necessarily going to be in the, contact center or in the finance department, but to the extent that it impacts like payments and deposits, these are core functions of the credit union. And so you can't just like delegate this and say, you figure this out. Like we need executives involved in these discussions so that we don't just get stuck in the tactics, but we are looking at the big picture. One of the risks I see is this idea of like, well, we're just going to do some experimentation or some tactical solution, but not getting that strategic discussion that, the executive team, the board. And so I just want to elevate it all to that level so that they're thinking about what does this mean for our organization? And then they think about what are the next steps on some particular strategic path.
If I'm a credit union CEO and I'm thinking about, and I want to learn about what this means for me, how can Wide Open Ventures help me and my leadership team understand stablecoins?
Yeah, so I think this really is an education journey. I'm doing a lot of speaking about this. Just real quick on 2026, my speaking is probably about 50% AI and 50% stable coins.
Wow.
And so whether that's conferences, board presentations, executive workshops, like I view these as the two pillars for 2026 in terms of emerging technology. But the problem is it ends up being this like bilateral work where I'm helping individual credit unions, which is great. But, the credit union industry is so collaborative. And I know there's some consortiums out there that are exploring kind of like technology and solutions. But as it comes to like strategy and education, I feel like that's a bit of a gap in the market. So what we're launching are what we call stablecoin cohorts, which would be a group of 10 credit unions going through a 3-month process of education, strategy discussion, initial execution. And the beauty of that is then I can provide more of the guidance and the education. I've been in this space a long time, so I can lead those conversations, but then it also creates that cross discussion among the credit unions so that they're not learning and experimenting in isolation. We want to get people working on this together. So we're still in the process of finalizing the proposal, but my website, lamontblack.com, people can find me. I'm sure we'll mention that again at the end. But if people are interested, we're starting the first one in February. So this is a great time to jump in.
What a great idea. And I think it really taps into the credit union willingness to work together, right? To create their own cohorts like that. I think that's really valuable. You mentioned AI, right? Everyone's talking about AI, what it's doing. What are credit unions doing well with AI thus far, in your opinion?
Yeah, I would say among the credit unions we're working with, I think the historical use case has been lending. So if you think about consumer loan underwriting, auto decisioning. There's a number of partners in this space that have been working with credit unions for several years now. So, we're seeing those numbers move from like 20% to 40%, sometimes even higher. So I think consumer loan underwriting has been done pretty well over the last 5 to 10 years. I think contact center support has done fairly well. There's a number of partners and providers in that space for kind of like an internal knowledge base, even if it's employee facing, so that then member service reps can answer questions more quickly and get to the right answer. I feel like customer or member service, is one of the use cases that seems to get a lot of focus and I think has done pretty well. Where I think the industry has not thought as much, if I may, is across those other verticals of the organization and the other leaders. So like what we do when we come in and we do our discovery initial consulting engagement, we work with the full executive leadership team, not just the chief loan officer, not just the chief operations officer, which people think of as those two use cases, but even like the chief finance officer, thinking about how is this going to impact like accounting and settlement? How do we start automating some of those processes so that they are better streamlined? If you think about fraud, there's a lot of software providers around fraud, but typically larger credit unions still have like a fraud analyst who's pulling that file, going and looking at member transaction history. There's still a lot of manual processes on the back end of fraud. And so I think we're going to see more automation of that. As you think about member experience, personalization, next best product, a lot of those tools today are very kind of, simple regression. If you own this product, we're going to introduce this product. They're not taking advantage of that full data profile of the member. Even something like one of our clients we're working with is doing like CD renewals. If your member has a certificate of deposit, how do you stay ahead of that maturity date so that you are retaining as many of those deposits as you can and also pricing them most effectively so that then we're not just kind of hoping they stick around or waiting for them to do the shopping. So there's just all kinds of these creative use cases, even resume automation review, things like that. It's really about how do we get people problem solving their pain points using these AI tools. That's not always a third party. Sometimes it's Microsoft Copilot. How can I do some of this myself? And then we get that kind of spreading across the organization.
How do you, with so much opportunity, and I think that's what you're describing, right? The deep and rich opportunities that exist in many different services or service areas inside the credit union. How do you approach AI governance so that you don't end up tying yourself in knots?
Yeah, governance is super important. I think a great place to start is like an AI risk policy. I think that's most credit unions, if they don't already have that in place, they're working on it. Putting some of those guardrails around generative AI, which tools are available, what's appropriate, what's not. So I think that's a starting point. But governance is much bigger than that. It's also thinking about your data and tech stack. So, moving from more of like a core-based focus to more of a data warehouse and ultimately data lake and lakehouse. It's about giving the right access to the right models that aren't siloed, but we're starting to pull across all these different dimensions of information. So that's the real like IT work around governance in terms of data access and security. But I also view governance more as like a culture. And, if you think about ethics and what's appropriate and what's not, like one phrase that's out there now with AI is work slop. As these tools, I don't know if you've heard that.
I've not heard this before. Yeah. What is work slop?
Work slop is like as generative AI becomes more and more a part of everyday work, people are going to get lazier and they're just going to let it do the emails for them or write the brief for them. And I don't know about you, but like I get some of these emails also on like LinkedIn. Like LinkedIn is mostly AI written now. And to me, it's just like, it just feels a little bit shallow. It feels like people haven't really thought about it. They're just kind of prompting, getting something, and posting it. And so with work slop, it's like, do we start to lose some of that critical thinking where, we're not managing these tools, we're just starting to depend on them? I would say, I've given a ton of board presentations around AI, and that is the number one concern that comes up, is not the data security concern. It is more so, do people start checking their brains at the door and just using these tools without thinking? And so that, to me, that's a culture issue of how do we make sure people lean into the tool? Because you don't want them to say like, well, I'm just going to do it the old school way because that's the real work. No, this is a tool.
I got a pen. I'll just write it.
Yeah, that's right. Like this is the productivity tool of our generation. So you want people leaning into it, but you want to, what are they bringing to the table? Viewing it as a thought partner, not just as like an intern that I'm constantly delegating stuff to. It's making me better in the process.
Right. So, hopefully everybody knows you're also an academic. Like, you teach at university still. How has that balance between assistance and turning your brain off? What have you seen as a professor?
Yes, this is a huge debate in higher education. It goes all the way back to 2022 with the release of ChatGPT. And, people who have kids might remember a lot of public school systems like banned ChatGPT. My kids are in Chicago public schools. It was open up until recently. They recently banned it again. And so that just highlights, even at the secondary level, this kind of back and forth. I think most universities had a very kind of like anti-stance. We had to put something in our syllabus and saying like, if you're going to use AI, you have to like cite it and like all these things. That conversation has shifted. So now most higher ed is trying to lean into AI, view it as this like tool and technology. So here at DePaul in our business school, we have like, our business school is called Dreehouse, AI at Dreehouse. It's like a whole initiative. We're trying to bake it into our core programming. So, the writing is on the wall. But I can say it personally as a professor. Like, one example is just like a year ago, I was teaching a course with an online exam. One of my students was at the bottom of the class. She was like failing the course. It was an online final, multiple choice, and she aced it. Now you tell me, I don't know, and it's impossible to verify, but I just emailed her. I was like, did you use ChatGPT? And her response was one word, no. And I'm like, what can I do? I don't know. Yeah. So now all my exams are paper and pencil, calculator, like in person. There are stories of like people going back to oral exams. So it's shifting for sure.
Interesting. Let's step back into the credit union world. One of the things that many credit unions are doing as they progress through the AI journey is they're starting to implement and starting to talk about agentic systems. What, in plain language, what is an agentic system, and what are the types of things it might be able to help a credit union with?
Yeah, so when I'm explaining AI, I kind of use different categories of AI. Machine learning has been around a long time. That's like a model for doing lending, things like that. Generative AI, most people are now familiar with for like writing emails, summarizing meetings, things like that. So agentic AI is like that third category that's now on the horizon. Think of the root word of generative being generate, the ability to produce content. The root word of agentic is agent. So AI actually taking action. So instead of just making recommendations, it can then go out and complete those tasks. I think of an example of like with restaurants. I'm not just getting a list of restaurants, it can make a reservation for me. In a work context, that could be scheduling meetings or, operationalizing some particular process. When I think about credit unions and AI adoption, I think the future of agentic AI, I would think of as like workflow automation. A lot of lot of larger credit unions have been doing robotic process automation for a number of years. RPA is great, but it tends to be pretty formulaic and fixed. And it's like, well, let's build this thing and hope it runs for like, a fairly long period of time. With AI, things are changing so quickly. You want something that's dynamic, nimble. It can handle nuance and discretion. And so think of it as like intelligent automation. I think the future of workflows is like people and then AI. Think of it as like swim lanes in a flow chart, and each process will move back and forth so that what do humans do well, what do computers do well. So every credit union should be thinking about how this impacts like operational efficiency. The one thing I would be remiss not to mention is this phrase agentic commerce. That is not getting enough attention. This is agents operating on behalf of consumers. It's not the credit union and their agent and how they're servicing their members. It is like consumer-facing agents who are then doing things like shopping on behalf of the consumer. And so if you think about financial services, like looking for a new car loan or something like that, they're not going to be going to your credit union website and looking through deals and clicking out and filling out forms. They're going to be using a dialogue tool, kind of like ChatGPT, that's going to present different offers and then say, do you want me to go ahead and sign up for this loan contract through this best rate? And so it's going to shift that relationship more towards the agent and less the like direct consumer facing relationship. That's the trend that I think not enough credit unions are looking at today.
In fact, we're starting to see companies that will create credentials for the agents.
Yes.
Right? So that this agent is in fact operating on behalf of Dr. Black.
Yes. And part of that credentialing is also like APIs. Like, are they able to access your data to find you and source those different options? I think people are aware that like search has been disrupted. More and more people, instead of Googling something, they're looking things up using like a ChatGPT. So there's, this idea of switching from SEO to like GEO, generative optimization. But this is not just, again, it's not just search. It is also like actually executing, doing the buying and the purchasing and the processing. So, making sure those agents can interact with you is going to be very important. Otherwise, they're going to look elsewhere.
So if you look at maybe the next year, right? We're sitting here in January, right? If you look at 2026, are there constraints that you expect to, or perhaps maybe constraints isn't the right word. Are there constraints, restrictions, limitations on AI that you expect to, be surpassed or broken through this year? What are you looking forward to from an AI perspective?
Yeah, I think it's really about these tools getting better and better. So it's the constraint so far is that think of like ChatGPT in 2022 as like a beta version of generative AI. It has continued to improve. Now we've got obviously Copilot, Claude, Grok, and other tools. So these are going to continue to proliferate. So the first one is like, are people going to check their brain at the door in terms of concerns around AI? The second one is typically hallucination risk. Like, how do I trust these things if it might be giving me wrong information? That error kind of percentage is going to be shrinking more and more over time. And so as you think about like adoption and use cases, I think those are going to get even stronger as these tools get even better. So that's just where I don't want credit unions evaluating the current frontier and then saying, okay, we'll revisit this in 6 months or a year.
Too long.
Like, this stuff is moving fast. And I am on record as like standing against this phrase fast follower. I don't know if you've heard me. I mean, I say it from stage. Like that typically, what in my experience is wait and see. If we're having a conversation about AI or stablecoins, and then they're like, well, we don't want to be bleeding edge, and so we're just going to watch until the dust settles. Like the dust is settling, things are emerging, and if you're not like part of the conversation, then you're going to be like, wait, what happened? Like,
right.
Yeah.
So in order to avoid, because you're right, I think the concept of being a fast follower was just a way of saying, well, I'm not doing anything for now, but I'll watch it in the future. If a credit union today approaches you and says, Doc, where do we start? Where do we start with AI? What's your advice to them?
So my approach, our approach at Wide Open Ventures is like what I call like a technology adoption framework. So starting at the top of the house, thinking about strategy, not tactics, even all the way up to the strategic plan. Like, how does all of this relate to your core mission and objectives? That could be operational efficiency. It could be member growth. Like, you want AI, stablecoins, whatever that next thing is, to be fueling that missional vision. So make sure you've got that North Star, tie it to the strategy, then start talking about like leadership. How is our executive team approaching this? Are we aligned as a team? Typically, like with AI, for instance, it's the technologist, the CIO or the CTO, and they just say, I don't know, you figure it out and then come back to us. That's like pushing change horizontally. So our work is to get the full leadership team aligned and then start thinking about like governance, culture. How do we start moving this down into the organization? AI in particular, this is going to impact every person in your institution. That's not just the IT department. This isn't like rolling out a new version of Windows. This is like generational change. One could argue like we have now ended the information revolution and we have entered the age of AI. That's not something that you just say like, well, you know, let's partner with a new person to figure out loan decisioning. No, right. That's beautiful, but that is like one tiny piece of this much bigger puzzle. So I just want to encourage credit unions to think of this as organizational change, strategy, leadership, governance, culture. Then you get into the use cases and execution. And so that's our approach at Wide Open. And I think we've been pretty successful in guiding people through that process.
What are some of the typical kind of roadblocks that credit unions have to get to that point where they're having the right conversations? What do they mentally have to get past?
So sometimes there are technical challenges, you know, like it's hard to roll out Copilot across the organization if you haven't gone through this thing called Purview and you don't have all your data aligned and things like that. But typically, to your point, it is more of a mindset. And I would say the mindset constraint is sometimes like, if it ain't broke, don't fix it. And this idea that AI is like something I use to help me write my email. Like there are most CEOs, when they think about AI, they probably either think about some vertical use case like lending, or they think about it helps me manage my email. Like this is like every aspect of work. And so as you think about, you know, finances, as you think about operations, as you think about lending, as you think about retail, even the chief people officer, this is something I'm also on record on of like, this is technology plus people. And so if you have like a CIO or CTO, and then you have maybe a chief people officer or a VP of HR or something like that, those are your twin superpowers. You need to bring those people together to start doing more training, learning and development, workshopping, getting people socialized to this new technology. So then it's not just, let me watch a few videos. No, it's like, let's get in a room with our laptops and let me show you all this cool stuff I can do. And now we're going to have some like show and tell. That's when you start getting technology adoption out through the organization.
Yeah. If a credit union is interested in engaging you in Wide Open Ventures, how do they reach out to you?
So my website's probably the best place, lamontblack.com. We've got some videos there that explain our consulting work, my contact information. You know, LinkedIn, I'm also very active there. So if anybody wants to connect, please do send me a message. Happy to have those conversations.
Excellent. Well, Doctor, thank you very much for joining us today. You have such a great perspective and such deep knowledge of what's happening out there. I hope credit unions are listening.
Thanks, Kris. My pleasure.
Have a good one. I have to believe that Dr. Lamont Black is one of the most influential people in our business today. Thank you so much for spending time with us today. If you like this content, please like and subscribe on your platform of choice. We will see you next time.